Hello?
Hello, hello.
What's up, man? What do you want to chat about?
Cool.
How's it going?
It's great. I thought you asked a question, so I was waiting.
Oh, I was just saying, how's it going? What do you want to talk about?
Okay, so I honestly, the most interesting point I think here is, and that's kind of pertinent to just discussions around socialism, it's always kind of the hot topic is tax the rich. So I am of the opinion that America and other countries that want to succeed have to, whether we like it or not, court the rich in a sense because we are so heavily dependent on that tax revenue to fund public services. So, like the top 1% paying roughly 40% of federal income tax is a huge, huge thing. And the bottom
Wait.
50%.
I have to add a quick. I have to add a quick clarifier. I have to add a quick. I have to add a quick clarifier to that statement because that could be very misleading. What you're referring to is the top 1% of income earners, not the top 1% of wealth holders. The top 1% of wealth holders actually pay relatively low amount of tax. So, for example, the top 400 wealthiest families pay a lower effective tax rate than the average American.
But I think wealth is something, taxing wealth, I think, is just a very risky thing to do. And I'm open to taxing capital gains. But in terms of taxing wealth, that is money that you've accumulated that you've already paid taxes on. So I don't see it as just doubly tax that. And especially
wait, that's not true. Wait, that's not true that you've already paid taxes on that. So, for example, Elon Musk's net worth went up like over 200 billion over the course of the pandemic. He didn't pay a dime in taxes on that.
Yeah, but the principal that he invested, he did pay taxes on that amount. And
that's a lot different than saying that he paid taxes on the wealth he accrued. That's not even remotely the same thing.
I didn't pay taxes on the wealth he accrued. But like I said, I would be open to entertaining the prospect of taxing capital gains once you've realized those gains more heavily. But taxing wealth itself, I think, is a road to ending prosperity because you can't predict what the markets are going to do. So if you've always got to build in this tax rate, when margins are already kind of slim, and if they weren't slim,
what margin? Wait, what margins are you saying are slim? Corporate profits are at record highs.
No, I'm talking about like the standard return, 7% on a diversified portfolio of assets across the stock market and debt, equities and debt. So around 7%. So I think if, say, you did Elizabeth Warren's 2% tax rate. Okay, so now your net gain on average from a diversified portfolio is going to be roughly 5%.
That's not what that means.
What I mean,
that's not what, wait. I'm sorry, but you're conflating a lot of different things. That's not what that means at all. So the wealth tax, the one that was proposed by Elizabeth Warren, only applied to fortunes, I believe, above 50 million. So, I mean, the vast majority of portfolios, that wouldn't apply to them at all.
Even still, though, my point is that you have to court the rich in a sense, because if your returns on your portfolio are going to be lower in the US, because there's this 2% wealth tax on whatever assets you have invested, and that's going to drag that 7% normal.
You can't keep conflating it like it's all assets that are invested. The wealth tax proposed by Elizabeth Warren, because that's the one you brought up, only applies to fortunes above $50 million. We're talking about a microscopic number of portfolios. And this is also individual wealth. So when you're talking about like a hedge fund, for example, that doesn't apply to them.
Sure, but let's take that, even that point. So you're going to have ultra rich people now who are looking at their opportunities around the globe, their investment opportunities. And if you have this 2% wealth tax on just the assets held, not even your earnings that you actually realize, basically you've got to build in a 2% drag on your roughly 7% expected gain from investing in the stock market. So given that now your expected return is going to be around 5%, there are probably other countries that are better investment opportunities for you now. So you're
I'm sorry. We have to address this because I think you're conflating a lot of different things. When you talk about this 7% expected return, this is not what Jeff Bezos is operating under. This is not what Elon Musk is operating under. This is not what Warren Buffett is operating under. Like this, you are conflating a different issue where you're talking about people trying to invest in the stock market to make money. Now, those are people that are realizing their gains. Like when you talk about that 7% return, You're talking about people that are attempting to realize the gains.
Sorry, my low battery thing came on. Let me grab my charger. But I mean, we could talk about a 20% return, but the same logic applies that nonetheless, whenever you build in this tax rate, that's on wealth and not capital, like realized capital gains, you've now got to build that as a drag onto your portfolio. And I think with that drag, I think there would be other more attractive investment opportunities abroad. So that
No,
would just
wait,
send
I'm sorry,
assets
but no,
abroad.
that's not true, because with the individuals we're talking about, they're not talking about realizing their gains. So like Elon Musk, for example, he's made it pretty explicit before that he actually doesn't intend on selling much of his stock. Now, recently it's been a little different because people suspect there's all sorts of different theories as to why he did the Twitter poll thing. But in previous accounts, he said that he has no intention of realizing his gains. He intends on just borrowing off of his assets and then just living off of that,
Yeah.
paying almost nothing in taxes. And so
Yeah.
it's like talking about this 7% return, like that's not, when we're talking about these mega wealthy people, that is not the framework that they're operating under.
Well, the 7% is what I'm talking about, what your wealth grows by. Even if you're not drawing it out, say I have $100 invested, I don't touch it and I don't take it out, I don't realize those gains. The 7% is still what my $100 is going to be growing off of each year.
No, wait,
So-
but this is why I keep saying you're conflating it. It wouldn't apply to people investing $100 into the stock market.
Okay, but let's say 100 million. Let's say
Okay,
100
yeah.
million. Same point stands, that 100 millionaire has the means to move their assets abroad. If they see that America is now a sub opportune investment in opportunity, and say like Europe is looking more attractive now, or some other country is looking more attractive now, those assets are now going to move to another country, and that will be, I think, to the detriment of our public services.
But
I want the same thing as
the
you.
idea though that Amazon, like as a company, would move to a different country is completely unfeasible. I mean, so much of what they do is localized within the US. They're going to move all of their warehouses, all of their shipping, they're going to move all of that to Europe. That doesn't even make any sense. They wouldn't be able to get anything from the US market if they weren't located in the US. They wouldn't be able to deliver packages to your house. Like that.
Well, you've also got to realize that companies, like, physical location doesn't necessarily determine where their books are. I think where their books are tends to be different, and basically a tax-driven situation. They choose whatever is going to allow them to maximize their profits.
No, of course, and that's why we need to close those loopholes, though.
I mean, I'm fine with closing loopholes in terms of keeping wealth that's produced here, recycling into our economy. I'm totally fine with that. Like, I don't like whenever companies do shady things like move their businesses abroad, basically in a paper form. Like, they're not actually there, but they're like tax havens, basically. Of course, I don't agree with that. But my point is, I think that we both want the same thing. We want well-funded public services, and particularly I want public services that help people garner skill sets that are marketable, that are in high demand, so that they can keep up with globalization, and they're not left behind as, say, a manufacturer who's now in an obsolete industry. Say in America, like, we have a lot of manufacturing that's like obsolete here. It's cheaper to do that in China. So I would rather, instead of trying to save those dying industries, I'd rather those people actually retrain to become something different. But to do that, we have to be well funded. So I agree with you in that respect. But I think that to do that, I think that we have to court the rich, because they pay so much of our revenues.
I fundamentally disagree that public policy should be based around trying to make the wealthy happy. That's what we've been doing for the last several decades in this country, and we've seen pretty disastrous results from it. That wasn't always the case in this country. Some of the most economically prosperous times in this country were when corporate tax rates were much higher, or when the top marginal rate was much higher. The top marginal rate at some point was over 90% in this country. And this was during the booming, well, actually it was 70% in the 50s when things were really booming. The corporate tax rate was also much higher. It was in the 50s at its peak. We've sustained much higher tax rates in this country. And the idea of this, I mean, what you're proposing is effectively the Laffer curve. The idea that if we cut taxes, revenue will go up. And this has been disproven, though, time and time again. The most prominent example is the Kansas experiment. They literally brought in Art Laffer, the guy, and he proposed the tax cuts that he said would drive up revenue. The exact opposite happened. tax revenue crashed in the state of Texas.
Oh,
They lost funding for schooling. They lost funding for all of their programs. It almost like failed
my
the
internet.
state.
Sorry, my internet. I think my internet cut out or yours, but you paused for after you said they brought in Laffer. But basically, like, I don't think that just because what Laffer proposed failed, like he said, oh, this is going to be the optimal rate. I don't think that just because he proposed the wrong optimal rate, that doesn't mean that there isn't an optimal rate. I think an optimal rate exists, and I'm open to finding that. But I'm not open to putting out just a random number that sounds good and then implementing that without first doing kind of like beta testing and testing it in a certain region or with like a sample of corporations or something that we can actually know what we're getting into when we're kind of jeopardizing the economic growth and tax revenue
really.
of this country.
I mean, if you want to talk about like what has been tried before, we could at the very least raise corporate tax rates to what they were under Obama. But that's not even the discussion right now because Trump slashed them. And now what's in discussion is lower than what they even were under Obama. So like, I mean, that is tried and true tax rates. That we had that in this country. All the businesses didn't leave. All the billionaires didn't leave. And so at the very least, we could sustain raising corporate taxes to that much.
Yeah. I mean, I think that I'm down with the universal tax rate that they just implemented, the 15% bare minimum, because I think the problem that happened with Trump's tax cuts wasn't the idea of tax cuts, it was how it was implemented. I think that corporate tax cuts could be a good thing if they restricted corporations' ability to buy back their stock. I think that that's an unproductive use of those tax savings. And I also think that they should basically, the thing that happens with those tax cuts is that some companies like Amazon were disproportionately benefiting from them, and they had so many write-offs that they still were paying an effective tax rate far below the 21% of the Tax Cuts and Jobs Act. I think the solution there is to rein in these companies that are multinational, because it's the fact that they're multinational that allows them to skirt around our tax policy so easily, whereas more domestic companies that are large still end up paying an effective rate oftentimes that's higher than the 21%. Like companies that are mostly domestic can actually end up paying in excess of the federal statutory corporate tax rate because they're so domestic.
You lost me in the first half, but now you got me back in the second half. So you would support making stock buybacks illegal?
Not necessarily illegal. I would want to look into what is optimal, because at the same time, like, I think, okay, stock buybacks, yeah, I don't think they're the most productive use of that money, but at the same time, like, anybody who has an IRA, which, like, I have an IRA, like, I saw an increase in my wealth as just an average person from all these corporations doing that. So I'd want to see, like, what's optimal for increasing the wealth of Americans over the long term, not just the short term, but the long term.
I think you have to look at it more specified, though. You can't just say increasing wealth. You have to say increasing wealth for who. So when we talk about increasing wealth for the stock market, we know that I think it's upwards of 90% of all stocks are owned by the top 10% wealthiest Americans. Mm-hmm. So when you're talking about gains for the stock market, you're talking about the rich just getting richer. We're not talking about this. And the reason I say stock buybacks illegal is that stock buybacks actually used to be illegal in this country. They were viewed as stock price manipulation. And I mean, that is what they are. It's a company trying to artificially drive up the price of their stock. They were made legal under Reagan, and this is also when we saw a ton of the reforms that I was alluding to earlier that had pretty disastrous effects on this economy. And Reagan slashed corporate tax rates, he slashed top marginal income tax rates, and we basically welcomed in the neoliberal era with Reagan. And so I like that, but this seems to run contrary to the point that you're making originally. Like, I 100% agree. We should increase taxes on corporations and scale back their ability to take advantage of loopholes that are offshore. But like I said, this kind of runs contrary to what you're saying before, where you're like, we should cater to the wealthy. I disagree with that. But if you're saying that,
when I say that, I don't mean that we should cater to them suboptimally. Like, I think that we should cater to them to the extent that it keeps their investments here, that it keeps them having their assets here, that it keeps them earning their income through America, that they're reporting their income through American taxation. Because if they're incentivized to leverage all of those loopholes or just like move their assets abroad, that would be to the detriment of everybody. The working class especially is hit hardest whenever tax revenues leave. You see it in heavily Democrat-run cities all the time. Whenever they have good intentions, they raise the taxes on the wealthy, but the wealthy, more than anybody else, are the people who have the means to leave when their money isn't being basically invested optimally. If they see that their investments are no longer optimal, they'll do something to optimize them, and that usually means leaving.
What I would say to that, though, is just that, like, I feel like it's kind of a cop out to say, like, oh, I just think we should do everything optimally. Like, yeah, I also think we should do everything optimally. But the question is, what would be optimal? And it seems to me, based on the data, raising the corporate tax rate, raising the top marginal rate, raising the capital gains rate would be optimal. We wouldn't see increased tax revenue as a result, and we wouldn't see this massive capital flight.
So I'd be interested to see, and I'm open to the data, but like, did that happen when we raised corporate? We had the highest statutory corporate tax rate in the world under Obama.
But our effective rate was substantially lower, though.
Effective rate was lower, but nonetheless, that effective rate is only lower because companies were doing things like reinvesting into research and development. That's a write-off. It's basically write-offs. The American system that incentivizes people to reinvest in their business makes the effective rate lower, but that effective rate is lower because those people were productive with their money. They used it on expenses that were a reinvestment into their businesses.
That's not always the case. Some of it can go into research and development. Oftentimes it goes into stock buybacks. I mean, this was the biggest thing we saw with the Trump tax cuts. They massively cut taxes on corporations, and they didn't spend it on capital expenditure. Some of it went to capital expenditure projects. But
I don't like buybacks.
The majority of it went to stock buybacks.
I'm not a huge fan of buybacks.
But I'm saying that you were talking about the data. You're saying, what's the data? We saw the data. When they cut corporate tax rate under Obama, and when Trump cut what they were under Obama to 21%, they didn't massively increase capital expenditures, at least not at the rates that were predicted. They just spent it all on stock buybacks. I believe it was either 2018 or 2019. It was a record number of stock buybacks. I think it was 2018. This was the direct impact of the tax cuts. The trickle-down effect just doesn't really play out in theory or in reality.
Honestly, I think people dog the trickle-down a little too readily, because I think that there's a lot of evidence to suggest that what has happened since the 80s, yes, the rich have gotten like egregiously rich, but at the same time, like our poorest 20%, the poorest 20% of Americans are richer on average than the average OECD, which is all of Europe basically, citizen. So I think we're still serving our poor better than most other countries.
Where are you getting this data? You think that the bottom 20% is richer than, so you're saying that, so you're just saying OECD, not every OECD nation. You're saying that like the bottom 20% of America, like what would that
be? Than the average OECD country, and that's from the Foundation for Economic Education. You can look up bottom 20% of Americans richer than the average OECD, and it'll come up right there.
I'd be very interested to dive into that data. But but we can talk about, since the 80s, what's happened over the last several decades is that as the rich have gotten exponentially wealthier, real median wages have been largely stagnant. We haven't seen this big boom in middle class. We've seen the middle class slowly erode, and we've seen wealth inequality just grow greater and greater in this country. And so I would fundamentally disagree that this experiment with neoliberalism has been anything but a failure, really. I mean, we've seen, especially when you look at, like, what'd you say?
I disagree, because I think that the wealth of our poor is still much greater than the poor of the rest of the world. Like, you got to think 70 to 80% of the world also lives on less than $10 US a day. Like, I think we're doing something right. We could optimize some things.
You have to look at simply like other developed nations. You can't compare it to like countries that have been ravaged by imperialism for the last several centuries.
Take the OECD, for example. The OECD, those are all developed countries almost. I'm pretty sure every single one is considered a developed country.
I mean, yeah, that's largely what is considered developed nations. But that's what I'm saying, though. Like, on almost every metric. That's why I'm very curious by your bottom 20% lives better than the average person in these other countries. I'm very curious by that, because
just based on consumption,
by almost every metric that doesn't seem to be accurate, because like I said, for example, the poverty rate in other OECD nations is substantially lower than it is here in the United States when you're using the same poverty rate. So that's why I'm skeptical of that claim. I think it's important to dive deeper into that. On things like healthcare, for example, we do substantially worse than these other nations. So it's like, because this is another thing, when you don't adjust for benefits that these countries provide. So like, yeah, sure, maybe we could make slightly more wages, but when all of that's getting eaten up by exorbitant healthcare costs, we actually net are coming out worse.
So the study was based on just consumption of goods and services and non-cash welfare benefits like subsidized housing and food stamps. So even taking those things into account,
Wait, that's a much different claim then. So when you're saying consumption, before you said it was wealth, is wealthier in these. You said the bottom 20% is wealthier than the average OECD nation.
Well, I just mean like standard of living. We have a higher standard of living.
But what do you mean by how are you measuring standard of living? Because that's pretty relevant.
Just consumption of goods and services.
In what way, though?
Just what do you mean consumption of goods and services?
What's the name of the study?
Foundation for Economic Education. That's the name of the organization. I don't remember what this study was. It was some article that they cited.
Bottom 20% live better than average OECD. This is probably it. So I'm not seeing like the data in here. I found the article.
And Foundation for Economic Education is like a very legitimate organization. Of course, it's a conservative think tank. It is. I'll concede that, but it's a credentialed organization. It's not just some bimbo off the wall thing.
Yeah, of course. But I guess without diving in, because most of this is just like claims. It's not really like citing data. Not saying that it isn't, but I'll look into. This.
Even aside from like that point, like I think, for example, like people bash the hell out of Trump, but like I think like those tax cuts are the reason why wealth, and this time I actually mean wealth. I don't mean like I didn't mean to say like they're wealthier than. I meant to say they have a higher standard of living, which is usually measured by just consumption of goods and services. But even wealth, like I do think that. So I'm not, like I said, on surface, I'm not a fan of stock buybacks. I don't feel like that's the most productive use of that money because it's just going straight into paper, which inflates the paper and makes like whoever, thanks for the sunglasses, makes whoever holds that paper suddenly like richer. But it's like, did it actually create wealth? I'm skeptical. I don't think so. But even still, it did make Americans richer in the capacity that, say, like, Black households, household wealth from 2016 to 2019, and this is data from the Federal Reserve, and of course that's like during Trump's tenure, increased by 65%. Hispanic wealth, household wealth, median household wealth. These are all median household wealth.
But I think something important to keep in mind though is that the wealth gap continued to grow under Trump as well. So this is relevant. So you can say like the nominal wealth increased, but that's one, you have to adjust for inflation. And two, the wealth gap continued to grow under Trump.
So I've got a great stat for you, because actually the data suggests the Federal Reserve data from the same kind of report. It was just like an overview report. Thank you for the sunglasses again. It was like an overview report that the Fed put out that was basically saying Federal Reserve data, and I've got it right in front of me. Federal Reserve data also suggests income inequality was on the decline during this period. Between 2016 and 2019, median family income rose by 5%, while mean family income decreased by 3%. This trend suggests a narrowing in the income distribution over this period. So that's income-based, not wealth-based.
Wait, but mean isn't relevant. It's median that you want to be looking at, because mean can be heavily driven up by the average. So if you have, for example, like if me and Bill Gates walk into a room, the mean wealth might be $50 billion. But that's not what we really care about.
But median rose by 5%. Mean decreased by 3%. That's why they say that suggests a narrowing. because if the median is increasing while the overall mean is decreasing, that means that it suggests at least that the income inequality was actually decreasing during that 2016 to 2019 period surveyed.
This
And the
seems,
trend,
I'm looking at this right now. I mean, saying wealth inequality grew by about 9% under Trump. The distance between the highest and lowest income brackets. This was a
what is
faster
that
growth.
source?
This was a faster growth rate than from 1990 to 2015. So this is looking at, this is the United States Census Bureau.
And that was what date range?
So this is for, let's see. So this is from, so it's from 2021, but I can't imagine it's looking at like 2017 to 2020. It could be. Let's see.
Yeah. So this was just 2016 to 2019. So it's pretty isolated to just Trump's tenure, which is what I like about
2016 wouldn't be one you want to look at because Trump wasn't even in office then.
He was for half, like November onwards, so not half of the year, but
that's not how the presidency works. You don't get sworn in until January.
That is true, but it's still 2017, 2018, 2019. I think that's a pretty decent kind of survey of just trends over that time period. So I didn't design the study, so I can't alter it, but I think it's pretty decent, and it's from the Federal Reserve. They only do these kind of studies on certain time intervals, so I don't think that's controllable, but I still think it's directionally useful to observing trends that directionally were happening over the course of the Trump presidency.
I'm just saying that this seems to run contrary to at least the reportings of the Census Bureau. The idea that income inequality was lessening, and just intuitively, this also makes sense because we know the vast majority of the benefits from Trump's tax cuts went to the top 1% in large corporations. The median tax cut, I believe, was something around like $800. That was like what the median household got. The mean tax cut was substantially higher because most of the benefits went to more wealthy people. And so I don't know, this doesn't really pass the initial sniff test. I don't know. I'm interested to see. It makes me skeptical that it's including a period that Trump wasn't in office. But
it's from the Federal Reserve.
It's also worth noting though that consumer debt went up under Trump. Now this was a continuing trend. That's the thing. Most of my critiques of Trump's economy are critiques that also apply to Obama's economy. I think that just what we've seen over the last several decades hasn't been positive.
Same goes with praises of Trump. Like you can't. I never am a fan of whenever people attribute economic trends entirely to one president, because economic trends are generally, they have a lag of them. Like unemployment's a great example. Like people expect a policy to immediately have effects, and that's just simply not the reality of how a macro economy works. But I think directionally, it is suggestive that maybe the tax cuts were doing something right, because even home ownership increased over 60% during that same 2016 to 29. Was that the same period? Yes.
Is this looking at the entirety of 2019, or is it looking up to the beginning of 2019?
It's between 2016 and 2019. So I guess it would be, if it said between, it does the 2016 hyphen 2019.
What is that one? What is that one called? Because I'm gonna bookmark that one as well to go through. What is that one called?
Let me do control, because this is actually on an article that I had published, but I stopped paying for the domain name. So it's not.
No, I feel that.
It's not published anymore. Let me pull it into the actual hyperlink. So it is federalreserve.gov, and I would just Google search the title, which is disparities. Okay, this is actually another one, but I think it has most of these figures. I'll send you all the Federal Reserve ones. So the first one is disparities in wealth by race and ethnicity in the 2019 survey of consumer finances. And let me make sure there wasn't another. Okay, the source for the median and mean family income is different, but also from the Federal Reserve. So that one is called, the one I just cited, I actually didn't dig into that data, but basically Hispanics were growing in their net worth, median net worth, household net worth, were growing by over 30%. Black families were growing by 65%, and white families during the same period, wealth rose by over 3% over the same period. So that also suggests a narrowing of not only like income inequality, but also racial wealth gaps. So I think there were a lot of important stats that frankly just were never discussed. Like, I don't blame you for not knowing about them because like I
Well,
had
no,
to
it's not
dig
not
to
knowing
find
them.
these.
Frankly, I would like to clarify. It's not knowing them. It runs contrary to the data that I've seen and the data that I presented. So, like when you
Yeah.
talk about wealth inequality shrinking under Trump, that directly contradicts, I mean, what I'm citing right here. So it's not a matter of not knowing. It's that I think that frankly some of it I think could be misleadingly interpreted, and the rest I
Well,
think could be.
I took the wording directly from the Federal Reserve when they say, and this suggests a narrowing in income inequality, or this suggests, and Lord knows that the government institutions weren't necessarily pro-Trump, especially the Fed, which is somewhat independent of the government. It's technically, I think, private, but
It's not.
naturally it's not independent of the government, but it's not a politically run thing. Like, you don't have like, oh, we have a majority in the Fed. Like, it doesn't
The
work
Fed is
that way.
pretty political. I would not.
It is political, but I would say that
I
it
just want
was.
to clarify. Wait, I want to clarify. The Fed is not private. It is very much part of the federal government. It's like the opposite of like a private institution. It is more isolated from like democratic institutions, but it is absolutely a political body.
I think it is a political body, but what I'm saying is I don't think that they had a huge bias in favor of Trump, and they still wrote these things. I don't think that any institutions were like out here cheering on Trump. Like, I think he was a pretty anti-establishment candidate, and he continued to be that throughout his presidency because the establishment hated him.
Let's dive into that a little bit. When you say anti-establishment, what do you mean by that? Because I mean, I think that Trump was anything but anti-establishment. I think his cabinet directly contradicts the idea of him being anti-establishment. So, ExxonMobil was the Secretary of State. He had a former CIA director as one of his heads of state. He had a former Raytheon lobbyist as his Secretary of Defense. He had Goldman Sachs in the Treasury Department. I mean, that's the opposite of this anti-establishment.
So I mean anti-establishment in the sense that he was a nonconformist relative to the standards of the Republican Party and what they expected of him. I think that he was populist in many ways. I know you would disagree with that, but I think he was populist in many ways. That's not a traditionally Republican thing to be.
Let's dive into some of those like specifics though, the specifics of what you're saying. So in what way, in terms of policy, do you feel like he broke ranks in a major way from traditional neoconservatism?
So I think that conservatives are traditionally, and I frankly am pretty against tariffs, but obviously he was notorious for employing tariffs against China in an effort to bring manufacturing jobs back to the US. I don't really know that that was super successful. However, I do think that he was making an effort to bring manufacturing jobs back through tariffs, which I think is a populist move. I respect him for being
that though, because like you can bring up that there were some tariffs on China and there were also like some tariffs on steel, I believe, in some European nations. But largely, like one of his big things was like, I'm going to get rid of NAFTA. I'm going to get rid of NAFTA and I'm going to replace it with something great. He got rid of NAFTA and he replaced it with the USMCA, which is the exact same thing as NAFTA. Like, it's not the exact same thing as NAFTA, but all of the major parts of NAFTA are in the USMCA. And so I don't know, he talked a big talk with like his protectionist rhetoric, but I mean, the data showed, I mean, his tax cuts literally incentivized outsourcing. That we net lost manufacturing jobs under Trump. And so like, I do think that like, this is why I asked about like what policies like you feel like he broke ranks with neoconservatism, just because like, I mean, he talked sometimes differently, but his actions really reflected it, especially in terms of like foreign policy, for example.
Well, not necessarily in terms of neoconservatism, but the Republican establishment. I think, like, for example, whenever he pulled out of the WHO, Republican establishment is very much in line with the whole globalist agenda and America being very involved in all these globalist organizations like the WHO. But what Trump did is he's not necessarily slashing the money that goes towards the WHO. He just slashed our contractual ties to them. We were contractually obligated to give them X amount of money, and he slashed that. But most of our contributions to the
I don't know.
WHO are
I wouldn't
voluntary
say
anyway.
that that's a wait. I wouldn't say that that's a big break though from traditional Republican dogma.
I definitely think it is. I don't think it is in terms
How many
of what
people?
Republicans.
How many Republican senators spoke out against that then?
They're not going to campaign about it. I'm not saying that Republicans put this on their face, but establishment Republicans have always supported the globalist kind of America, being involved in all these globalist organizations like the WHO, like that TPP. The TPP was another one that I think had bipartisan support. And Trump was very true to his America First philosophy. And that's kind of why I find him honorable.
He wasn't true to America First though. His tax cuts literally incentivized outsourcing. We net lost manufacturing jobs, and he replaced NAFTA with an identical deal. But he wasn't true to America
manufacturing
first.
Jobs in and of themselves, like alone in isolation, I don't think are a good measure of the overall well-being of the American economy.
Well, I think better measures we lost them to outsourcing. Like it's not like they went away. They were outsourced to other places.
Sure, but like I said, maybe the savings that companies are getting from outsourcing those things are trickling down in the form of increased spending power by Americans. I think the real measures of economic well-being are really like the median family income, which was rising during Trump's tenure.
You just contradicted your entire point from before. You said, like, I'm very against the traditional Republican, you called it globalist agenda. And then you said, it's fine if corporations outsource jobs if it means they have more money. Like, that completely contradicts what you said.
I never said that I was like against globalism. I said that Republicans are generally for globalism. Trump was against globalism, and he was consistent in that. I am against globalist organizations. I'm not against globalization because I have a background in economics, and I believe in basically allowing whoever can produce the most efficiently to do so. And I'd rather just retrain our workers to do something that their time is better served doing than to try to save dying industries here.
But this was a different claim, though. Like, you brought up TPP. You were specifically alluding to these trade policies that incentivize outsourcing. And so when I said Trump's policies incentivize outsourcing, you're saying, well, maybe the corporations have more money to potentially spend on wages. That is the argument. But wait, just to be clear, though, that is the argument the Republican establishment has made about these trade policies for decades. Like, we're talking about where is Trump different than traditional Republicans? So we'll put that aside for a second. Where else was he different? Because you said he was anti-establishment.
So let me clarify on the globalism thing. So I am saying that I'm personally against globalist like bureaucracy in effect. Just as a broad umbrella term, globalist bureaucracy in general is not a friend of productivity and innovation. So that's what I'm against. And I agreed with Trump in pulling us out of things like the TPP and the WHO, where we were contractually obligated to be pouring money into things that we weren't necessarily getting a good return on. And like, I think a lot of the reason why like everybody points to like Europe and they can have all these great healthcare programs is because we pick up the bill for so many of their things that they don't pay for, like their military. And that's through these globalist bureaucratic organizations. That's why I admire Trump, because he was pulling out of all of that stuff and prioritizing American wealth to stay here. Whether that was corporate wealth or not, that still, I think, uplifted all Americans. And you saw that in the median income rising.
This isn't true. Like I know what you're saying, but that's not what happened. We saw outsourcing increase under Trump. He incentivizes. Like, I know like the logic of what you're saying. You're saying pull out of these institutions and put the wealth back in America. But that's not what Trump did. That wasn't the ramifications of his policies. Like we brought up NAFTA. He replaced it with an identical trade policy.
But you're just looking at manufacturing, which I don't think is a great measure of the overall well-being, economic well-being of the country. I think
we're talking about outsourcing jobs because you can't really outsource like a service job, like a waiter, for example. You can't really outsource that. Manufacturing is the sector that is hit hardest by outsourcing. That is why you talk about manufacturing specifically.
But I'm saying that the negative impact felt by manufacturing, I think, was outweighed by the positives in other areas of the economy. Otherwise, I don't think you would have seen median family income rise.
Wait, you have to agree then, though, That is what the people in favor of these, I would call them neoliberal trade policies, have been saying for decades. Like, that is not a break from traditional steps. Like, that is what they said. They're like, sure, we'll take a hit in the manufacturing sector, but we'll see growth in other sectors. Like, that is the exact argument they make about this. So, but your claim, though, is that Trump, but that's what he did, though. That's what I'm saying.
Yeah, I know. I was against the tariffs. Like I said, I have an economics background. I wasn't for the tariffs.
Not the tariffs. Not the tariffs. His tax policy specifically, the TCJA incentivized outsourcing.
How specifically?
Let's see. The TCJA.
Because I think that the Tax Cuts and Jobs Act helped corporations get wealthier by many respects, but I don't think it incentivized outsourcing. It just incentivized them, or didn't incentivize them. It just allowed them to accrue much greater wealth than they previously were able to. Which I do think has somewhat of a trickle down.
I mean, this is from the Institution of Taxation and Economics, but Institute of Taxation and Economic Policy.org. And it specifically goes into how this new legislation aims to change tax law provisions that incentivize outsourcing. It specifically cites General Motors laying off 14,000 North American workers to shift this production to, where is it saying they're shifting production to? I think it's to Mexico. Yeah, but no, it specifically cites how they would receive tax cuts to produce in these other countries. Like, that's the thing. It wasn't just a cuts in the corporate tax cut. It created more. I mean, the TCJA wasn't just cutting the corporate tax rate. It was tons of new loopholes. It wasn't just like a one-page document.
Yeah, I know that. But in general, I just think it allowed corporations to accrue more wealth, which they spent in a variety of ways. The stock buybacks are one area that I am not a huge fan of. But in other ways, I do think that it increased the overall economic well-being of Americans by allowing corporations to offer products at lower prices to stay competitive. Because at the end of the day, they can't just hoard all of their money and stay competitive.
I have a specific, here's one of the specific provisions from the tax bill. One of the most harmful provisions of the tax law is a provision that allows corporations to deduct 10% of some foreign income from their taxes based on how many tangible assets they have offshore, specifically incentivizing outsourcing. So one of the most harmful provisions of the tax law is a provision that allows corporations to deduct 10% of some foreign income from their taxes based on how many tangible assets they have offshore.
See, that's something I disagree with, because as I was saying earlier, domestically focused countries that should be rewarded for having their operations domestically.
I'm glad you disagree with it, though. But that is what Trump did. That is what I'm saying, though. No, you don't know, because you were saying before that Trump put America first, that Trump incentivized, and so I'm talking about specific provisions in his tax bill that incentivize outsourcing.
But I think there will always be positives and negatives. But I'm saying on the net, I think that Americans were doing far better under Trump than they have been in a long time. And a lot of those trends were inherited from Obama. I'll concede that. But the longest bull run in, I don't know how many, it was the longest bull run in 14 years at some point. Because I was just waiting for the market to crash, and it never did. And that was something that was astounding economists the world over. And I think that was in large part because of the stimulus given to the economy through corporations' ability to invest more money back into their companies to stay competitive.
I want to just really hammer in, though, on this point, though, of Trump being anti-establishment. And then I'm talking about this outsourcing that was incentivized, and then that led to increased corporate profits. And now you are making the traditional neoliberal argument for this, but saying at the same time you're anti-establishment. You're saying, well, yeah, sure, they outsource jobs, but these corporations have more money, and theoretically, it can go into the economy. Now, we know a lot of it didn't. It went to stock buybacks, but that's kind of the whole point. This is what they've been saying for decades now. And when Trump continued that trend, you're saying, no, he actually bucks the trend. But that's to the contrary of what his policies were.
You're pointing to things he did that are to the contrary. My argument is that every president will have things that they do that are to the contrary of what their goal at the outset was or what they said their goal was. Every president will have that. You can only evaluate based on the net outcomes of a presidency. That is what I think we should hold presidents to the judgment of, because naturally, when you're enacting so many different policies across so many different agencies in a macro economy with an infinite number of variables moving, I think that you're naturally going to have things that contradict your campaign promises or what you intended to do. So I think that we should measure based on net outcomes. And I think that the net outcomes of the Trump presidency were great. And I think people dismiss him for that.
Okay. All right. So there's a couple things. One, I find it funny. You're saying like, I'm trying to say what he said. You're talking about what he did. I think it's more relevant what he did. And I do think that the net outcomes, because I'm sure you did. You said you're talking about what he did.
Yeah, I mean, you're
exactly.
talking about things that he did. I'm also talking about things that he did. I'm saying on the net, the things that he did produced a positive outcome in this country.
But they didn't, though, especially because I'm assuming you only want to look at 2017 to 2019 because we can see that the crash did come in 2020. Now, largely this was the result of COVID, but this is the thing.
I don't think anybody would blame that on the president.
The economy was a house of cards, and this is the problem. Well, you can blame part of it. I mean, when you dismantle the pandemic response team, for example, in the build up to 2020, talk about getting rid of bureaucratic institutions. Well, maybe it would have been helpful to have that in the build up to COVID. But regardless, though, I do think when you have an economy that's built on cards, so for example, 2 million Americans lost their health insurance between 2017 and 2019. This was the direct result of Trump's actions. We saw consumer debt increased also under Trump. You can't just look at like median just mean wages or median wages without looking at the entire story. But the other part is though, is that our country did worse coming out of the pandemic than other countries did because our pandemic was so built on this house of cards. And this, like I said, this is a continuation of policies we've seen for decades. But that's my argument, is that Trump wasn't a break from those previous policies, at least not in this way.
I don't think it was built on a house of cards because I don't think we would have experienced the V-shaped recovery that we did if it were built on a house of cards.
It wasn't V-shaped, it was K-shaped.
A V-shape, it was pretty V-shaped.
Was it?
I don't know what does K-shaped mean. I don't even know what that means.
K-shaped is really like the opposite of what you want to happen. So the wealthy continue to do good. So for example, the stock market. The stock market never really dipped in a big way. There was like little dips at the beginning of the pandemic, but for the most part.
That's the pandemic. I think that looks like a V. And it's increased beyond where it was prior to the pandemic. And then some.
I'm sorry. Wait. Are you looking at the stock market, or what are you looking?
This is the S&P 500, which is just the top 500 companies. Saying,
but as we established earlier, though, 90% of all stocks are owned by the top 10% wealthy people. That is what the K-shaped. But that's what a K-shaped recovery means. Is so the people at the top, they start going back up, so they have the V. But the people at the bottom, they continue going down. And this is what we saw. We saw that the average American is getting hit really hard right now. We're seeing some nominal increases to wages, but they're getting eaten up by inflation. The average American is not doing good right now. And that's the thing. The wealthy, wait. This is important. This is an important point, though. So it wasn't a V-shaped recovery. We saw that wealthy people made a ton of money. We referenced Elon Musk before. His net worth increased by over $200 billion over the course of the pandemic. That is not what the average household, that's not what their net worth went up over the course of the pandemic. We saw a ton of people lose jobs. We saw businesses, small businesses, a ton of them shut down. This is a result of, I mean, you can talk about pandemic policies, but just they were hit hard in the recession and large corporations expanded. That's the thing, though, is it was an economy built on a house of cards. And so that's why it's a K-shaped recovery. Like when you say V-shaped recovery, that implies that we're doing good now. Do you think we're doing good now?
No, but I think we're not doing well because of leftist policy. Like the COVID shutdowns that you mentioned there and all the small businesses shutting down.
Which is it then? Is it a V-shaped recovery, or are we not doing good because of leftism?
I think we're doing so. I think that the stock market is doing extremely well, and I think everybody has the ability to invest in the stock market. I'm 25 years old, and I have a ton invested in that. Not a ton, but the majority of my net worth is invested in the stock market. Americans need to take personal accountability and recognize that there's this wealth engine that they are leaving on the sidelines and not taking advantage of. I'm self-educated with the stock market, and frankly, I think all Americans should be. But I advocate for financial literacy in schools, but that's another point. But anyway, I think that the V-shaped recovery not only applied to just the stock market. I think when the stock market does well, it allows average Americans to do well who are homeowners. And that's a lot of people beyond just people who own stocks. My parents are not stock people. They're terrified of stocks, but their net worth greatly increased from the rise in the stock market, because with the rise in these assets prices, generally the stock market follows. and that is a wealth builder for U.S. families, and that's why you saw
I mean,
over
but
this period.
we're in a bubble right now, though. That's the thing, though. This is what we mean by K-shaped recovery. Like, there are certain aspects of the economy, largely stuff that benefits wealthy people, like real estate prices, like stock prices, going up a lot right now. But wages right now, like hourly wages, are pretty much stagnant. There are some increases in some places, but like I said, they're getting eaten alive by inflation right now. So the average American isn't doing good.
But I think inflation is a result of leftist policies and leftist government spending, because that's what's increasing the money supply.
No.
The only reason, if you look at the Federal Reserve's money printing that occurred in 2020, there is a massive spike in money printing that occurred in 2020 to keep up with the absurd government spending that was going on. Let me look up Federal Reserve.
No, but here's the problem, though. If this were the case, if it was the direct result of government spending, we would see the inflation across the board. But that's not what we see. We see very hyper-focused areas of inflation. Yeah, no,
that giant spike right there.
Yeah, it's because we spend money.
In the beginning of the scale starts at 2002. So that spike is what happened due to government spending. That was largely a leftist initiative they wanted to spend all this money.
All right, so let's dive into this a little deeper, though, because if what you were saying was true, if the inflation was just the result of government spending, we would see the inflation across the board, right?
Not necessarily. It depends on where the money is going.
What sector do you think would, for some reason, be like left out? Like, if it was government spending, why would it only be in certain areas?
When you increase the money supply, that's money that's going to get filtered into all areas of the economy.
Exactly. So if it was the result of government spending, we would see the inflation happening all over, right? But most of the inflation,
it wouldn't be a perfectly even distribution of impact.
It wouldn't be perfectly even, but it would be pretty close. Like, it wouldn't be like some weird abnormalities, right?
Not at this point, because the money printing happened last year. There's going to be a lag in the distribution of that wealth.
Okay. But the point is, though, is that the inflation, we're seeing it very in hyper-focused areas. So the biggest area we're seeing is in energy cost. This is not like, we wouldn't see it hyper-focused on the price of the international price of oil if it was the result of government spending. The skyrocketing energy prices we're seeing right now is because during the pandemic, demand plummeted because people weren't using oil as much, people weren't using gas as much, they weren't traveling as much, they weren't producing as much. So people weren't using oil. OPEC, this is very explicit. They had an unprecedented scale back in the amount they were producing. They said this is because demand is way down. And now that we're back up, the production is trying to catch back up. But because of the pandemic and the increased demand is higher than before. We're seeing oil prices internationally much higher. And so that's why, I mean, that specific inflation isn't the result of government spending. And if it was a result of government spending, why is this a worldwide phenomenon?
But I think that that will play a part in it, the increase in demand. Definitely, I agree with that. That will play a part in it, but I also think a probably larger part is that the total assets of the Federal Reserve went from under 5 trillion to 7.17 trillion. That's nearly a 50% increase in the total assets of the Federal Reserve. And total assets of the Federal Reserve, meaning they increased their assets by buying things from, I think they buy treasury bonds or something to put dollars into the economy. So increasing the money supply by that much, I think, is the main reason why we're experiencing the inflation that we're experiencing right now.
It's not, because like I said, if that was the case, though, we wouldn't see it so hyper-focused. Another big area where we're seeing it right now is with food. That's one of the big areas we're seeing inflation right now. It's
not hyper-focused, though. It's across so many different areas. Like,
if you look at the CPI, for example, so the CPI is the numbers for between, like, I think it's like January and October was something like 6.1%. But if you look at core inflation, so if you exclude energy and food, the two most volatile sectors, it's all the way down to 4%. Still high, but it's 2% lower. And so that means that
energy and food are like what keeps the world going around. Like, that's stuff we consume every day.
Exactly. No. Energy and food are very important. But the point of core inflation is to show that this is hyper-focused in a certain area. Because if it wasn't just energy and food, core inflation would be relatively the same as the normal CPI data. But it's not, because that's where most of the inflation we're seeing is. Now, there's other inflation. You also mentioned the stock market. You can argue that this isn't really how we measure inflation, but the stock market continues to rise and rise. That's because a giant portion of the stimulus went to corporations. And some of these corporations, even though they got money to keep their employers because there wasn't stipulations that they couldn't fire people, they fired people anyway. So people weren't doing good, but corporations did good. The government effectively bailed out the stock market. That's what they did with the first round of COVID stimulus back in 2020. So that's why we see the stock. So that's why we saw the stock market didn't take a huge hit because corporations.
There's a difference between direct government spending and bailouts and tax cuts.
No,
so
this was bailouts in the terms of like loans that often didn't even have to be paid back.
Yeah, PPP loans.
The loans that were available to large corporations was unlimited. There was no cap put on them. But the loans that were available to small businesses, there was a cap put on them. So large businesses were largely taken care of during the pandemic. And that's why we saw the stock market do very well, because small businesses, they're not really in the stock market. You know what I mean? You don't have much publicly traded mom and pop stores. And so as a result, that's why as they're going down, the stock market still continues to do good. And so where we're seeing the money supply, we're seeing it in the areas we would expect to. If it was just from government spending, we would see it more across the board. It's also, I mean, this ignores the idea. There's a shipping container shortage right now. There's a shortage of people that want to drive trucks right now. This largely has to do with truckers being exploited for the last decade. And so I do think that it's more complex than just we printed money, because printing money doesn't inherently cause problems.
So it's the printing money, it's the rising demand, it's also the shortage in labor, or people who are willing to work. We don't have a labor shortage. We have a shortage of people who are willing to work because they are being subsidized to sit at home. They are earning more than they would be earning, or at least close to what they would be earning if they were actually working. And I think that is a leftist push that has caused inflation to only be exacerbated, because when the supply of labor or people who are willing to work is lower, the cost of production is higher, and the cost that we pay for everything is higher. And that is because people are being incentivized to stay home.
Let's address that then. So you think it's the expanded unemployment benefits, the extra $600. You think that's why people are currently like not going to work as fast?
I do not think that helped. And I think unemployment benefits altogether are way too lenient. Most of them expand like 6 months, which I think is ridiculous. It doesn't take 6 months to find a job.
For some people it can, especially in a tight labor market when it's hard to find jobs. When everything is shutting down. Wait. Let's stay on this one point, though. So the expanded benefits have been over for 2 months. Regular unemployment benefits we've had in this country for decades. That wouldn't cause the giant. But no. But if this were why, then why is this a new thing? Why are we now just seeing all these people that aren't going to work? It's obviously not the result of unemployment that we've had for decades.
Because the Federal Reserve increased its balance sheet by nearly or over $2 trillion. And when the amount,
you can't keep saying that the Federal Reserve increased the money supply, but you have to.
Let me finish this point. Okay. Let me finish this point. So the Federal Reserve increased its balance sheet or its assets by over $2 trillion, roughly $2 trillion.
But where did most of that money go?
The total amount of U.S. currency in circulation is around $1.5 trillion total. If you don't think that that kind of monetary expansion is going to cause drastic inflation, and that it's not the primary driver behind the highest inflation that we've seen in over 30 years, I think that's crazy. Like, how can you deny that increase in money is what's driving it?
I keep explaining the different areas and explaining why we're seeing these inflation, because you brought up something really important, though. The Federal Reserve's balance sheet increased. Now, this is important. It's not just that like they didn't literally have like a money printer going. A lot of this is literally just stuff on a keyboard. They're moving numbers around in a computer. Like this, that's where a lot of this comes from. This printing comes from. It's not like literally printing more dollars. And an important part here is, where did the money go? Where did most of this money that was printed, where did it go? Did it go into the pockets of the average American?
I think that it went into plenty of measures to help the average American, and maybe too many. If you look at how many people are sitting out of work,
to the American people? The majority of it went to large corporations, though. That's where we're seeing the stock market do so well.
Job openings are at a record high right now. I don't know how many years back you have to go for the last time that job openings were this high. But if there are that many people that aren't needing to go find a job, I think they're doing pretty well, and they were too well taken care of, if you ask me.
I want to just address first of all the idea of just I'm America first, but the American people were getting too much. They're doing too well right now. I think that there's a bit of a contradiction with that.
I'm
Well, there's a bit
America
of
first for everybody who's willing to help
a bit of a,
themselves.
I'm just saying, a bit of a contradiction to say that the American people got too much when they didn't. When you compare us like to some of the other benefits that other countries were doing, the Americans were largely left behind in terms of direct stimulus that they received from the government. A lot of
Because
this went to corporations.
America is a country of personal responsibility. And being America first doesn't mean that you believe in coddling Americans. It means that you believe in letting every American become their best selves through their own hard work and their own virtue.
But that's not what's happening right now, though. Unfortunately, that's just not what's happening, especially when we have, I mean, this is a term coined by Bernie Sanders often. We have socialism for the rich and rugged capitalism for the poor. And that's what's happening. So when you talk about these bailouts, a lot of it went to corporations. And that's why I think that you do see arguably an inflated stock market right now, an artificially high stock market, because you talk about how, yeah, isn't it weird that like when we massively scale back production, we massively, demand drops for a year, the stock market weirdly didn't reflect that. You would assume that because their revenues were down, their stock price would also go down. But as you pointed out with the S&P 500, they basically stayed the same. And this is because the government bailed them out. And so they weren't really taking care of the average American.
What bailout specifically are you pointing to? Because earnings have been relatively strong in the stock market. I don't know what you're talking about. The S&P 500 earnings have been...
What bailout? The first round of stimulus that was passed in 2020, I believe it was in May.
Like PPP loans?
That was part of it, yeah.
Yeah, I mean, PPP loans, though, were available to, like, my parents, who are small business owners. Like, they also were able to get those.
As we established before, though, the amount that could go to small businesses was capped. The amount for large businesses, there was no cap on that. It was unlimited. The Federal Reserve had basically, I forget the exact number, they had free range to make sure that corporations were taken care of. And so, yeah.
And on the surface, I think I would disagree with that. But I assume that policy was put in place because those corporations were systemically important for some reason. It's kind of like how they had to bail out big banks and everybody freaks out over that. But people don't realize if banks collapse, that causes a domino effect that affects even the lowest class Americans. Like, you can't just allow giant businesses to fail because that does hurt all of us. And I'm not for giving people unfair advantages. I'm not for that at all. But I assume there was a good economic reason why those bailouts were given.
So it's not that people have a problem that we didn't just let like the financial sector crash. It's that we bailed out these banks. We bailed out Goldman Sachs, for example, and we left them intact. We said, I mean, there were oftentimes money from the bailouts literally went to bonuses for executives. That was the problem, is that during the 2008 recession, we gave money to these banks, but instead of taking, I mean, for example, I believe it was Iceland. Iceland bailed out their banks, but they took ownership stakes in them. They said, okay, if the taxpayer is going to pay you out, then the taxpayer is going to own the banks. If you guys fail, that's how capitalism works. If we have to bail you out, then that's how it works.
Yeah,
but in the US, that's not what we did. But that's not what we did with the Wall Street bailouts. We gave them the money, and we said, you guys are good to go. Continue making profits. And that's why I believe it's the 4 largest banks right now can directly attribute their profits to an implicit government subsidy of being too big to fail. They know that they're going to be taken care of.
So, like, I disagree with that, but that's not a right-wing solution. That is subsidizing a business's obsolescence. In order for a business to receive something from the government, I think that they should be giving the government something back. The government should operate just like any business does. If they're going to invest in something, they better get a return on it. So I agree with you that I disagree with them doing that, but that is not a conservative thing to do, to subsidize a company that isn't going to give you a market return.
The framing on this is important, though, because I think this is worth noting. So in 2008, you would have been in favor of nationalizing the banks.
No, not national, like not entirely taking them over, but equity stakes, like having a little equity in the bank. Yeah, like, but
the bailouts, we had to bail out to the point. Some of these banks we had to bail out to the point where we would have gotten ownership stakes in them. We would have been the majority shareholder. This is like Norway, for example. They've nationalized their oil industry. They own shares in their oil industry. Like, that's how they've taken nationalization of it. Like,
I think there's something to be said about the dangers of nationalization, because then private businesses become less incentivized to be efficient because they receive their funding whether they're profitable or not, because they receive their funding through tax revenue, not profits. So I think that there's still an incentive to make sure that the government is still a minority share, but there could be some other outside arrangement to ensure that the government was getting a return on that money outside of equity ownership. But I think equity ownership should be majority private. That way they're incentivized to actually be productive instead of just being able to be obsolete and they just get subsidized by tax dollars. That's what happens with nationalization.
So before then, when I was saying I brought up Iceland's solution, you said that's a good thing, and you said, well, that's a right wing thing. But now you're walking that back and saying that's not a right wing thing. That's not what you would support.
So I don't think it would be a right wing thing to take enough equity stake such that you'd suddenly have a nationalized bank, because conservatism is all about respecting private institutions and honoring the efficiency of private institutions. So I agree that the government should act as a regular economic actor and that it's trying to actually get a return on whatever money it's putting into things, but not to the extent that it renders private institutions state controlled, because state control is also contrary to conservative principles. We don't want things to be state controlled, but that doesn't mean we don't want the state to operate in its own best interest, just like any other economic actor.
I mean, it seems like a bit of a mishmash of an answer, but if you would support any sort of the government taking ownership stakes in those banks, I'll take it. I'll take it.
Yeah, I mean, I'm open to ideas. Like, I'm a very open-minded Republican, but like, I just want solutions. But on that note, it's 12:19 my time. I don't know if it's super late where you are, but
all right,
sleepy.
Well, feel free to come on again, man. This was a good conversation.
No, yeah, I appreciate it. This was really fun, and I appreciate you being open-minded to my perspective. Thank you for bringing me on.
All right, we'll talk to you again soon, hopefully.